Next, what is the second topic? Tax planning and tax planning for salaried employees. Once you have done with the payroll process, the next step is tax. So if the individual is a tax paying, if the employee is a tax paying individual, means you have to, once the payroll process is completed for that employee, you have to concentrate on tax of the employee. So now what is tax? For tax saving purposes, a salaried employee should understand their tax slab as well as salary breakup component. There are various exemptions and deduction option available with simple method from which you can take advantage to minimize your tax liability. So here, tax means it is an amount that is deducted from the employee salary to make revenue for the government. So tax is simply, what is tax means? Amount that is deducted from the employee salary to make revenue for the government. That is the tax. So if some amount is deducted as a tax, means obviously that amount will be considered as a loss for the employee. So employee, they are contributing some, they are contributing their work, they are contributing their time to get salary from the employer. Again, that salary, the government is deducting to make revenue, means it is obviously a loss for the employee. So how you can minimize your tax liability? So that is called as tax planning. So if you want to minimize your tax liability, means then you have to know what is tax slab and what is the salary component of an employee. So salary component you will know. That is basic plus DA, HRA, MA, TA, SA, that is special allowance, gross, PF, ESA, gratuity. So these are all the salary component that you already know. Now what you have to know is what is this tax slab for a tax slab of the government. So there is two types of tax slab. One is old tax slab and another one is new tax slab. So you have to calculate the employee's income in old tax and new tax, and you have to see which tax slab is benefit for the employee, which tax slab gives the low tax liability for the employee. If old tax is giving low liability, means then you can pay tax in old slab. If new slab is giving low tax liability for an employee, means you can pay the tax, or the employee can pay the tax under new slab. So whatever or whichever tax slab is profit to that particular individual, they can follow the tax slab. Now, understanding of salary component. So now we will see what is the tax slab. Two different tax slab. First, we will understand what are all the two different tax slab. Then we will go for the salary component. See, this is the tax slab under old tax regime. I already told you there are two types of slab. One is old tax slab and another one is new tax slab. Or we can call it as old tax regime or new tax regime. So this is the tax slab for old tax regime. And this is the tax slab for new tax regime. Here, in this old tax regime, the annual income 0 to 2.5 lakhs. Annual income. You should not consider monthly income or anything. You should consider only the annual income. The annual income between 0 to 2.5 lakhs is 0. Means you need not to pay any tax to the government. Then the annual income 2.5, that is 2,50,001 rupee, from 2.5 to 5 lakhs, it is 5%. Then you have to pay 5% to the government. If your income, annual income falls between 2.5 to 5 lakhs, then you have to pay 5% to the government as tax. Now, your annual income 5 lakhs to 10 lakhs means then you have to pay 20%. Your annual income above 10 lakhs means you have to pay 30%. Okay, so this is the tax slab for old tax regime. Now, we will see the new tax regime. In this new tax regime, if your annual income falls between 0 to 3 lakhs, then you need not to pay any tax to the government. If your annual income ranges from 3 lakhs to 6 lakhs, you have to pay 5% of tax. Your annual income ranges from 6 lakhs to 9 lakhs, you have to pay 10%. Your annual income ranges from 9 lakhs to 12 lakhs, then you have to pay 15%. Between 12 lakhs to 15 lakhs, it is 20%. From 15 lakhs, above 15 lakhs means it's 30%. Here, above 10 lakhs means 30%. Here, above 15 lakhs means 30%. So, the annual income ranges from 9 lakhs to 12 lakhs, you have to pay 15% only. Here, if you follow old tax regime, you have to pay 30%. But here you have to pay only 50%. You can see what is the difference. 30% and 50%. Nearly half of the percentage is reduced in new tax regime. So this is the tax slab for new tax regime. So you have to calculate, you know how to calculate the CTC. So if you calculate the per month CTC into 12, you will get annual CTC. So in that annual CTC, you have to apply this percentage. Say for example, 4,50,000 as annual CTC means, see 4,50,000, this falls here. 3 lakhs to 6 lakhs. So in this range, the 4,50,000 falls, annual income falls here. So you need to pay only 5%. Then 4,50,000 into 5%, whatever the amount is coming, that amount you have to pay as tax to the government. Understood? Now, understanding of salary component. There are some components available in salary structure that have provision of exemption and deduction under the Income Tax Act. First is house rent allowance, education allowance. Next is travel allowances. Okay. So these are all the salary components where you can have some exemptions. Like for house rent allowance, house rent allowance up to 96,000 per annum, a person or an individual can claim as a tax exemption. So a person who is earning 8,000 rupees as HRA per month, as a HRA rupees 8,000 per month, that person need not to pay any tax to the government on house rent allowance, HRA. Okay, say for example, I am a person who is receiving a salary, who is receiving an annual income of rupees 5 lakhs. My annual income is rupees 5 lakhs. But I am earning rupees 8,000 as my HRA. It means I need not, it means I will not pay any tax on HRA. See, I am earning 5 lakhs rupees per annum. So for 5 lakhs, you will be giving some breakup. Okay. So if my salary breakup, that is HRA, is falling under 8,000 or 8,000 rupees means I need not to pay any tax on HRA because government has given some exemption, tax exemption of rupees 8,000 per month as 8,000 per month as tax exemption for each and every tax paying individual and 96,000 per annum for each and every tax paying individual. 8,000 into 12, it is 96,000. So up to 96,000, a person need not to pay any tax to the government. So that is the provision the government has given as a tax exemption to the tax paying individual. Next is education allowances. Education allowances is also the government is giving some provisions on provisions of tax exemptions, because if the employer is giving education allowance as a salary component means, so for education allowance, what is government has given tax exemption is 100 rupees per child. 100 rupees per child, and for 2 children, you can give education allowance. So 100 rupees into 2, that is 200 rupees. So 200 rupees per annum. 200 rupees per annum, you need not to pay any tax to the government. So for education allowance, if their employer is giving 200 rupees as an education allowance means, then you need not to pay any tax on this education allowances. So if the employer is giving about 200 rupees, or if the employer is giving 400 rupees, or if employer giving 1,000 rupees means 1,000 minus 200. So 800 only you have to pay tax. So whatever the tax amount, whatever the balance amount you are getting apart from 200 rupees, so you have to pay tax on that amount only. So up to 200 rupees, the government has given some tax exemption for each and every tax paying individual on education allowances. Next is leave travel allowances. Leave travel allowances is a quite huge topic. So that we will discuss in upcoming session, because you will be having a separate topic for LTA, that is leave travel allowances. In that leave travel allowances, we will discuss what is leave travel allowances and what is the tax eligibility for that leave travel allowances. So I simply say for leave travel allowances, it depends on the employers only. Employer will give some leave travel allowances to the employees. Okay, for that, only two journeys the employee can enjoy. For that 2 journeys, whatever the cost the employer is giving for that 2 journey, that is tax exempted from the tax exempted for that individual. Say for example, 5,000 rupees is given by the employer. So each journey 5,000 rupees, totally 10,000 rupees. So only 2 journey the employee can enjoy. So for that 2 journey, he can spend 10,000 rupees, which is given by the employer as LTA. So for that 10,000 rupees, the employee need not to pay any tax to the government. Okay, so that is the tax exemption given by the government. If the employee is enjoying 4 journey, 5,000 into 4, 20,000. So 5,000 into 4, 20,000 means then for 2 journeys only the government is giving the exemptions. So only for 2 journeys the individual need not to pay any tax. The remaining 2 journeys the individual has to pay tax. Clear? Investment and deduction option. You can claim tax deduction due to payment of life insurance premium, contribution to EPF, school fees. So if you are paying tax in the old tax regime, then you can enjoy some tax deductions. Okay, so under some there is various section under there is various section for old tax slab. So under that section, you can get your tax deduction. Okay, say for example, there is a section called 80C. In that 80C, if you have any investment means I'm investing some money, but I'm saving some money. Invest some money in LIC, life insurance premium. Invest some money in post office. Means you can show that investment to the employer and you can get the salary deduction. Say for example, my annual income is 5 lakh rupees. From that 5 lakh rupees, I am investing 20,000 rupees in LIC. I am investing 10,000 rupees in post office. So I can show the receipt that I have invested in LIC and I have invested in post office. I can show the receipt and get the tax deduction for that particular amount. So my income will be 5 lakhs minus that 30,000. So 5 lakh minus 30,000, 4 lakh 70,000. So I can get the deduction for that investment. Then my annual income is 4 lakh 70,000. So for 4 lakh 70,000, I need not to pay any tax for the government. So that is the advantage for this investment in deduction option. Understood? Next, you can claim the tax benefit on principal amount as well as interest payment on your home loan. Here, you can claim the tax benefit on principal amount. Means, say for example, I have taken a loan. I have taken a home loan. Not loan means only home loan, not any other loan, personal loan or car loan or nothing like that. Only home loan. So I have taken home loan to build a home or to purchase a home or to renovate the home. So for these purposes, I have taken some home loan and I am paying the interest as well as principal. For interest, there is a separate section. For principal, there is a separate section. For interest, there is the section called 80C. Sorry, not interest. For principal, there is a section called 80C. For interest, there is a section called 24B. Okay, so I have taken a loan. I've been paying principal amount. Means, say for example, my principal amount is 2 lakh rupees. So for that 2 lakh rupees, under section 80C, I can get the deduction and I need not to pay any tax for that principal amount. The same example, like if my annual income is 5 lakh rupees. So out of that 5 lakh rupees, I am paying 2 lakh rupees as a principal for my home loan. Then for that 2 lakh rupees, I need not to pay any tax amount. Okay, 5 lakhs minus 2 lakhs under section 80C. 5 lakhs minus 2 lakhs, 3 lakhs. So 3 lakhs, 0% is the tax liability. So I need not to pay any tax to the government. So that is the advantage if you invest any money on some sections. That is, if you invest any money on government sectors, like government sector, LIC is a government sector, post office is a government sector. So what is the main advantage is you are already investing money in government sector. You are already giving money for the revenue to the government. So again, you will not to pay any tax on that money. So that is the main purpose here. Next is installment paid for medical insurance also provide additional tax benefit. Now, for medical insurance also, the government is giving some deduction. So medical insurance, the section is called section 80cc. Section 80cc. So under the section 80cc, if you are investing some money on medical insurance, say for example, you have taken some insurance, medical insurance for yourself and your parents. So you are paying premium to your parents and yourself. So whatever the up to 15,000, the government is giving some deductions. So whatever the premium you are paying up to 15,000, you need not to pay any tax to the government. So if you are paying above 15,000 as a premium to the insurance company, then you have to pay tax to that amount. Say for example, if you are paying 15,000 as a insurance premium to any other insurance company means, then you need not to pay any tax to the government. But you are paying 20,000 as a insurance premium for any other insurance company means 15,000 minus 20, 5,000. Remaining 5,000 you have to pay tax to the government. If your parents is senior citizen means, then you can enjoy paying the premium up to 30,000. Okay, so for yourself as an individual, you should pay up to 15,000. For your parents, you can pay up to 15,000. If your parents is a senior citizen, then you have to you can enjoy up to 30,000 as a you can enjoy up to 30,000 for insurance premium. So if you are investing if you're investing 30,000 as a medical insurance to your parents, senior citizen parents means, then you not to pay any tax to the government. Then tax filing. Fill up the ITR form disclosing gross salary, different allowances, investment, and income from other sources separately. Document required for ITR filing is Form 16, Form 26A, AS statement of all saving bank account, interest or TDS certificate. So these are all the documents these are all the documents that is required to filing the tax. So while filing the tax, you have to disclose your gross salary. Okay, you have to disclose what is your gross salary, what are all the different allowances you are getting, that is basic plus DA, HRA, medical allowances, and other allowances like telephone reimbursement, car reimbursement, travel reimbursement, bonus. So these are all the allowance you are getting. So that allowance you have to disclose. And investment. Investment means savings. Like if you are investing some money in LIC means that you have to declare. You are investing some money in bank means that also you have to declare. If you are investing some money in post office, if you are investing money in gold means everything should be disclosed while filing the tax for the individual. Next, income from other sources separately. Income from other sources means, say for example, I'm investing 1 lakh rupees in post office. So in a fixed deposit. So I'm investing 1 lakh in fixed deposit in post office or any other bank. So I'm investing some money as a fixed deposit. In that fixed deposit, I will be receiving some interest. Okay, so I will be receiving some interest out of my investment. That interest I should declare or I should disclose while filing the ITR, because it is also one of the income for me, because the money I have invested in bank, so the bank is giving me some interest. So that is the income for me. So that income I have to show separately while filing the tax. And what are the documents you need? What are the documents required for filing the tax means Form 16, Form 26, statement of all savings bank account and interest on TDS certificate. So these are all the documents these are the documents which is needed to file the tax under the Income Tax Act 1961. Next is mathematical function. Before going to the mathematical function, we will see how to calculate the tax. Now, we will discuss first how to calculate the tax in new tax slab or new tax regime. So for that, first we have to know what is the income and a different percentage of tax liability. So here, this is the old one. This is the updated one. Okay, 0 to 3 is 0 to 3 lakhs is 0, 3 lakhs to 6 is 5, 6 to 9 is 10, 9 to 12 is 15, 12 to 15 is 20, 15 and above is 30. So whatever the income and tax slab you have to mention here. So see 0 to 3. No, 3 to 6. Zero to 3 lakhs, 3 lakhs to 6 lakhs, 6 lakhs to 9 lakhs, 9 lakhs to lakhs, 12 lakhs to 15 lakhs, 15 lakhs and above. Okay, so this is the income range. And this is the tax liability. 0 to 3 is 0, 3 to 6 is 5. Next is 10. Next is 15. Next is 20. Next is 30. Okay, so now what you have to do is, first you have to find the difference. We will take example 16 lakhs, 16 lakh as a individual income. Okay, so what you have to do is, first you have to find the difference. So now tell me what is the difference between 0 to 3 lakh? 3 lakh is the difference. Now, what is the difference between 6 to 3 lakhs? 3 lakhs minus 6 lakhs or 6 lakhs minus 3 lakhs. See, 6 lakhs minus 3 lakhs. 3 lakhs. Again, 9 lakhs minus 6 lakhs. 12 lakhs. 12 lakhs minus 9 lakhs. Again, 15 lakhs minus 12 lakhs. Here, 16 lakhs. So your annual income is 16 lakhs. 16 lakhs. Sorry. 16 lakhs minus 15 lakhs. Okay, if you add this, you should get 16 lakhs. Okay. So you have to find the difference. Then you have to apply the tax liability over that difference. See, 3 lakhs into 0 is 0. 3 lakhs into 5% is 15,000. Again, 3 lakhs into 10% is 30,000. 3 lakhs into 15% is 45,000. 3 lakhs, 3 lakhs into 20% is 60,000. 1 lakh into 30% is 30,000. Then you need to sum up all the tax payable. So for 16 lakhs, you need to pay tax rupees 1,80,000. So this is how you have to calculate the tax amount, tax liability. Understand? See, don't get confused. This is your CTC. So CTC 75,000. 75,000 into 12. 9 lakhs. Okay. So what you have to do? 9 lakhs is the annual income. Here, where this 9 lakh is falling? Here. So what you have to do is, don't go for the center. Your CTC is 9 lakhs per annum. So what you have to do is, first check whether your difference is right or not. So 9 lakhs. So 9 lakhs, for 9 lakhs, your tax liability is 45,000. So if your annual CTC is 9 lakh, means for out of this 9 lakhs, you have to pay 45,000 as a tax liability. Okay. So this is how you have to calculate the tax liability under new regime. Clear? Now, how you will I want you to find out the same type of calculation under old regime. So old regime, you can take CTC, CTC 7 lakhs. You can take CTC 7 lakhs, and I want you to calculate the difference, and you have to apply the percentage of tax to find the tax liability. The same thing. First, you need to you need to know the salary range and the percentage of tax. Rate of tax, you need to know. So, and you have to find the difference. Once you find the difference, you have to apply the rate of tax over that difference. So that is the formula. So, see, this is the income slab and tax. This is the income tax slab, and this is the rate of interest. For this, I want you to apply 7 lakhs as CTC on this old tax regime. Quickly calculate. Let me calculate this. Okay. It's 52,500. See, your annual CTC is 7,000, right? Your annual CTC is 7 lakhs. So from 7 lakhs, you have to minus 5 lakhs because your salary ranges from 5 to 7. So it is not going up. It is not, above 7 lakhs. So you need not consider the 10 lakhs. Okay, 7 minus 5. That is what I'm saying. You have to sum up the difference. If you sum up the difference, then you will know where you have done the mistake. So see, 2.5, 0 to 2.5 is 2.5. 5 to 5 minus 2.5 is 5. Here, your annual income is not above 10,000. It is ranges from 5,000 to 7,000 only. Sorry, 5 lakhs to 7 lakhs only. So from 7 lakhs, you have to minus 5 lakhs. Okay. Then you will get the difference. Then you will get the sum of difference is 7 lakhs. Then your calculation is right. So that difference, you have to apply that difference on tax rate. Okay. So if you apply that difference on tax rate means 2 lakhs 50,000, 0%, 0. 2 lakh 50,000, 5%, 12,500. 12 lakhs 20%, 40,000. Then 52,500 is the difference. Same thing. See here, new tax regime, you have applied 9 lakhs as CTC. If you apply the same 9 lakhs here, you just calculate the same 9 lakhs in old regime. We will compare which regime, which tax slab is profitable to the individual. The same 9 lakhs you calculate in old tax regime. Nine lakhs. See, 7 lakhs I already calculated. Now you calculate 9 lakhs. You got the answer? It's 92,500. Yes. Right? See, here what I am trying to say is the same 9 lakhs CTC. If you apply in old tax regime, you are getting 45,000 as a tax liability. But if you apply the same 9 lakh CTC in old tax regime, then your tax liability is 92,500. See the difference. In new tax regime, you will get tax liability 45,000. In old tax regime, you are getting tax liability as 92,500. Which is more profitable to an individual? Which is more profitable to an individual, guys? New one. Obviously new one, because in the new regime only they are paying less tax, which is 45,000 only they are paying. But in the old tax regime, they are paying nearly 1 lakh rupees, that is 92,500 rupees. They are paying as a tax liability. So here, new tax regime is the profitable to the person. So like this only, you have to plan your tax liability. You have to apply the tax. In what you have to apply your tax income, that is you have to apply your annual income in new tax and also old tax slab. So you have to compare and see which is profitable to an individual. So if old tax is profitable, then you can pay in old tax. If new tax is profitable, then you can pay in new tax. So in new tax, if the individual don't have any investment, their individual don't have any savings, nothing. They have only the salary. So apart from that salary, they are not investing money in mutual fund, investing money in LIC, nothing they are doing. So for them, new tax slab is profitable. But the individual who is having investment in LIC, mutual fund, medical insurance, um, other post office. So if they have in any investments, means for them, old tax regime is the profitable one. So I'll let you know how to calculate this investments deductions for old tax regime. Okay, so I will, in the next session, I will calculate the tax with investments. So I will calculate the tax with investment and I will apply that in old tax regime. So you can find the difference, which if an individual who is having investment, for that individual, which slab is profitable, either new one or old one. So I will let you know how to calculate the tax liability if an individual is having investments. Okay,